So you've heard about the R&D tax credits and you've got some questions. Specifically, how can I potentially use these credits to save a significant amount on my tax burden? Well, in this video, I'm going to cover exactly what the R&D tax credits are, who is going to be eligible for these credits, and the exact process for claiming $50,000 all the way up to hundreds of thousands of dollars in these tax credits for your business. Keeping in mind that this is not tax advice and does not apply to your personal circumstances. That being said, let's dive in and start off with what these tax credits actually are. Well, the R&D or Research and Development Tax Credit is a tax credit for innovative businesses. It basically incentivizes you to innovate and try new things. Specifically, we're talking about technological activities that improve processes or products. Those are the things that could qualify here, and we'll dive more into, in plain English, what that actually means in a second. Now, the kinds of industries that can benefit from this tax credit include tech startups, sciences, consulting, manufacturing, food and beverage, construction, and many more, but those are some of the highlighted categories. And essentially, these companies can claim a tax credit for a portion of their research and development activities. We'll dive into exactly what those numbers look like in just a second. And these particular research and development expenditures can include things like wages, supplies, contract research costs, and many other expenses. So now that you kind of understand these credits at a high level, let's dive into who is actually eligible to figure out if they are something that you should even be thinking about. Well, thankfully, the IRS has created a 4-part qualification checklist to determine if you and your business are in fact eligible for these credits. So let's dive into that right now. And 2 quick caveats before this 4-part test. These activities cannot pertain to marketing or advertising, and they must happen in the United States. Now, diving into the 4-part qualification test. Part 1 is that the purpose of research must create a new or improved function, performance, reliability, or quality for a business component. So essentially, you have to be creating something new or improving something existing that is directly related to the function of your business and how it currently makes revenue. So it has to make sense why you're doing this. Now, it doesn't need to be tangible, the results don't have to be perfect, and you don't have to offer a new or innovative product. You just have to be trying to create something new or improve an existing process. Part 2 is that the business must encounter a problem with a high degree of technical uncertainty and try to solve it using their own procedures. So the main thing to note here is that if there's no uncertainty with what you're trying to do here, it's probably not going to qualify. Part 3 is that the research must be technical in nature and rely heavily on a hard science. Now, when we say hard science, we're talking about things like machine learning, physics, chemistry, biology, software, or electrical engineering. And then as a little caveat within the software category, it can't be software that is commercially available. And then part 4 is that the experimentation must involve simulation, evaluation of alternatives, systematic trial and error, testing, modeling, and refining. So this has to be a very vigorous process that you're going through. But again, the purpose of this is to incentivize innovation, not success. So even if you do a bunch of R&D and it does not prove to be successful, you may still qualify for this credit if you're meeting those 4 criteria. So now that you know who's going to qualify, let's talk about which expenses do and don't qualify for this credit, because there are some pretty important specifications that you're going to want to be aware of, especially on the costs that do not qualify. Now, the IRS loves to make things complicated, so the costs that are going to qualify for this credit are any qualified expense that is used for a qualified activity, process, or product. Now, a qualified activity is just the 4-step process that we just went through. A qualified expense, on the other hand, is going to include things like salaries and wages for workers that are relevant to that R&D, relevant supplies, and relevant cloud services. Now, that's still a little vague, so it might be easier to figure out whether this applies to you by looking at the things that do not qualify. So costs that do not qualify are going to include things like research conducted outside of the United States, like we said before, any research that is being done by a third party for which you, the taxpayer, have no rights and or has not paid for, any market research, training, troubleshooting, customizing products or components for specific customers, or any attorney's fees, including filing for a patent. So now that you understand who is eligible for this credit and what exactly it applies to, let's dive into how you can claim up to 50 or even hundreds of thousands of dollars if you do in fact qualify. First thing you'll want to have is extensive documentation and records of all of these R&D expenses that are potentially qualified. If you don't, probably not worth your time to look into this credit any further. Now, that kind of documentation may include things like expense details, payroll records, project notes, lab results, emails and communication about the R&D, and any contractors doing R&D within the United States. So if you've got all that documented, you think you're qualified and you're ready to file, there are 3 forms that you're going to need to fill out. The first of which is Form 6765, which is the credit for increasing research activities. Then if you are a small business, you must also file Form 8974. This is the qualified small business payroll tax credit for increasing research activities. That's a mouthful. And this will be filed once the IRS has approved your credit. And then also on the small business side, the 8974 is actually going to be attached to your Form 941. So that'll all happen when you file that form. Now, as these forms are pretty technical and there is a lot of room for error, definitely wouldn't recommend doing this on your own. Fortunately, there are a lot of platforms out there and CPAs that'll do this for you. The one I personally use is called Gusto. They basically do all the legwork of determining whether you're eligible using all those criteria we talked about. Then they file all the forms for you. And once all is said and done, the credit is all yours. They got a pretty successful track record of doing this. Today, they've helped numerous companies save upwards of $300,000 each on these tax credits, which is pretty substantial. And you also get a bonus for signing up if you do use the link in the description below. It is my referral link, so it does help to support the channel, but you also get anywhere from $100 to a $400 Visa gift card for signing up, depending on the size of your business. So if you want to support the channel, feel free to use that link and let me know in the comments below if you have any additional questions about these tax credits, as they can be a bit complicated. Would love to help out any way that I can. Have a wonderful day, and I'll see you in the next video.